Let us take fourth part is nothing but the process of accounting. Now, process of accounting. This is the fourth. See, for example, first part is of input. Second is identification of the transaction, and final stage is nothing but output. Now something we have to input, second we have to process, and final the output is generated. These same stages are followed in terms of accounting. Now in input, what will give? We will give the transactions. Now transactions of what? Transactions of sales, transactions of purchases, transaction of expenses, transaction of the income generated, transaction of the investment made, transaction of all the accounts, what all the liabilities and the loans you have taken. So these are nothing but the transactions which you are doing. Now what you have to do in the identification, what we have to identify? We have to identify its accounting cycle. Now in accounting cycle, what we do, first we record the transaction, right? So what all transaction a firm has done? A firm will go undergo different kind of transaction, that is sale, purchase, investment, expenses, receipt, payment, voucher, journal, contra, etc., etc. So now the next stage would be what? That they have to. Uh, so next stage would be what? That they this recording would be done. Now recording of what? Recording first, the recording of transaction will be done. This all entries which the firm goes has to be recorded properly in recording. Then second, the same thing would be posted in ledger. Same things would be posted in ledger. Posting of ledgers would be posted according to the sales, purchases done, what are the expenses done, what are the incomes generated. All different ledgers would be created. Now in ledgers is what? Ledgers are prepared for some personal accounts. For example, 10 number of people are involved, say Salman, Imran, Ruhi, uh, mom, dad, your friend Rahul, your another friend, this one, this there was from whom you purchase the spare parts, from whom you purchase your goods, to whom you sell your goods, all the customer accounts with their names, or then what kind of incomes you generate, different categories of income from the sale of goods, from the interest earned, and all the different sources of incomes. This all will be done in posting of ledgers, right? Now after this ledgers, what you have to do? You have to prepare your trial balance. This is the third stage, preparation of trial balance, and final stage is preparation of final accounts. So these are four stages which are followed in any of the accounting technique. First, these transactions are to be recorded, and these transactions are recorded, and they are classified and posted in the ledgers, and afterwards they are being summarized in the form of trial balance, and afterwards the final accounts come into existence. Now what all things we have to do after doing all these things? We have to generate an output. In output, what we after generating output, what we are going to do? We are going to communicate those information to the users which require it. Now there are different kind of users. First, there is internal user. Internal user, say for example, internal user is nothing, your board of directors. Now board of director, what they require how much amount of sales we have done, how much amount of purchase the firm has undergone throughout the year or month wise, how much profit we have earned in for the company, what are the areas we are making more expenses, and what kind of loss we are making. So how much amount of depreciation we have got in the year, how much shareholders has given money, what is the status of investment done in our company, how many partners has invested in our company, and what all amount they have invested, what is the capital status, how can profit be increased. See, these all information the board of directors, the partners, the managers of the company, and different kind of officers of the company. This they require. These are nothing but their internal users. By using this information, they can the firm can grow, firm can make progress. If they understand accounts, then the business grows more perfectly, because perfect data can lead to perfect decisions. And there are another kind of users called as external users. Now in external users, there might be investors, because investors, what they do, investor, if someone is coming in and trying to invest in your firm, he will find whether your firm is healthy. Now healthy in terms of what? Healthy in terms of the profitability, whether your partners has invested much amount of capital, how many banks has put capital in your company, and what kind of profit you are generating, whether the company will long last or not. Because money is nothing but the fuel of the company, and monetary transactions are recorded in a balance sheet, and the investor sees the balance sheet first if he is smart, and then only he is going to invest. So external user is uh, investors. Second is lenders, same category. Then you have suppliers. These suppliers, now suppliers also need to see the your accounts, because suppliers, what they do, for example, they give you material on credit. For example, if you purchase if you are having a shop, and this shop, and this is, for example, Mr. A firm called as Mr. Rahul Lato. This he is going to give you credit materials every time. For example, if he has give you 10 bills, one bill of 1000, another bill of 2000, this is of 3000, and the last bill of the 5000. So what you do, you try to make the payment bill wise. Say if you have paid this one bill, this bill, and another bill you paid a lump sum amount of 4000. Now you paid 1000 more against this bill, and uh, that's 1000 can be reduced from the next bill. So for closing the account, you need to pay just 4000. So you a supplier also need to record the transaction whatever your firm is undergoing, and you also need to record the transaction. That's why suppliers also require to keep the accounts. Even the government agencies, now the government agencies require for taxation purpose. They have their own profit, tax of income tax, service tax, sale tax, all octroi tax, municipality tax, lot of taxes are there. And customers, now customers also, you provide few customers a few goods on credit. So after all, accounting is need to be closed. How much outstanding is there with the customer? You need to generate that list also. So even the customers need to keep account, and you also need to keep account. These are nothing but the external user of accounting. Thank you. Hope you understood the process of accounting.